Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds to 9 o'clock, with news that all eyes will be on market openings this morning following the Paris terror attacks. And the New Zealand markets will be the first to open worldwide. There is an air of nervousness about what will unfold, but few strategists expect a prolonged economic impact or change in prevailing market directions. But first, there is a G20 meeting in Turkey today and tomorrow, and there is a push to close international corporate tax loopholes, something that is expected to spur competition for lower rates. The changes are aimed at blocking companies from shifting profits from jurisdictions to avoid taxation. In the US over the weekend, retail sales data for October was disappointing, but it was something of an odd result in that car companies reported record sales, but this official survey reports car sales lower than the prior month. A companion survey shows that inventories continue to rise, and that trend will need to be reversed at some point, although the unadjusted data shows that it's really a retail sector issue only. Inflation numbers from the US on Wednesday could provide the final trigger for the Fed's plan to raise interest rates on December the 17th. The recent strong non-farm payrolls report firmed up expectations for a hike, especially as it showed wages rising 2.5% a year. And if general prices are shown to be rising as well, the die will be cast. US consumer sentiment is rising, according to the latest influential University of Michigan survey. Two trends dominate the early November data. Consumers anticipate somewhat larger income increases during the year ahead, as well as expecting somewhat lower inflation rate. This meant that consumers held the most favourable inflation-adjusted income expectations since 2007. China has moved to contain leverage trading on its stock markets, cutting by half the amount of borrowed money investors can use to buy shares. Margin requirements will be raised to 100% from 50% starting on November the 23rd, the Shanghai and Shenzhen authorities said in statements after local exchanges closed on Friday. In New York, the US Treasury 10-year yield benchmark gave up more of its gains it made earlier in the week, now up 2.27%. Then that was before the France attacks. It is likely to fall sharply today or tomorrow when Wall Street opens in a strong risk aversion mood. Today's New Zealand swap markets may give the first inkling into what may happen in Frankfurt, London and New York. US benchmark oil prices slipped lower again at the end of trading last week, now just over $41 a barrel, while the Brent benchmark is at $44 a barrel. The oil glut is more than 3 billion barrels. And oddly, drillers put rigs back into work in US oil fields after more than 2 months of pulling back. The gold price is also lower at $1,081 an ounce, but that may get a boost when the London gold market opens tonight. Copper hit its lowest prices since July 2009. New Zealand dollar starts the week at 65.4 US cents, 91.7 Aussie cents and 60.7 euro cents. The TWI is at 71. But given the shocking events in Paris on Saturday, it's very unclear how markets will react. Will we benefit as a safe haven or be marked down with a pullback from commodities? But the betting is our currency will come under pressure. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.